Other interesting business news, you have Best Buy. Q3 earnings are in. They kind of helped the stock dip a little bit. Their Q4 outlook is not so good. Now, Best Buy was recently in the hot seat for discriminating against employees. They had an initiative where they hired I was going to say, what's a nice word to say? No, there's not a nice way to say morally vacuous, I suppose. But they hired a marketing or a human resources company. And if you want to become a Best Buy manager, you had three criteria. One, you had to work there for at least a year, which I think that makes sense. The company has to make sure they're making an ROI on you, make sure you're invested. That makes sense. I agree with that. Two, you have to make sure you're an employee in good standing. That makes sense. You can't be showing up to work late, getting written up for disciplinary reasons. That makes sense. I think most people would agree with that. Now, the third reason, the most controversial one, was you had to be a specific race, including but not limited to, I believe it was African American, Asian Pacific Islander, Hispanic. They actually listed out all the options except Caucasian. So if you're a Caucasian, you did not qualify for the management trainee program, which, again, that's discrimination. So that was a big news article a couple weeks ago. And then it turned out they also discriminated based on apparel as well as knickknacks on their desk. So when I say that, I mean, in terms of the back office of Best Buy's and the Geek Squad, there's actually pictures where a man wanted to bring his Bible and he wanted to wear like a cross and have some religious materials at his cubicle. Again, this cubicle is behind the Best Buy. No one sees it. It's the back end of the offices or the back end of the facilities. And his management told him no, he could not have his religious materials. That being said, the whole office was colored, pun mildly intended, with rainbow pride flags and those other LGBT materials that many people will argue, because of the strong belief system that those people hold, that in itself could be interpreted as a religious materials. So Best Buy was again discriminating, saying, oh no, they can have those materials, but you cannot have your faith, what your belief system is, you're not allowed to have that in the office. So that was another point of backlash that led to some people to start to boycott Best Buy. Now, that being said, I don't know how much it really hurt their sales. We'll dive into that right now. And I'll never forget the one reason I went to Best Buy in the past 10 years, and the reason why I'll probably never go again, is I had an issue where I have many monitors in front of me for my day job, and I'll say day job, it's actually more of a 105 hours a week job, but nevertheless, it's one of those instances where I have many monitors in front of me because I love to have one for, email or CRM, usually LinkedIn or some type of research platform like that. And one of the cables went bad. So I thought, okay, I need a cable right now. Where can I go? All right, electronics store. Best Buy's still around somehow. I go to Best Buy. They didn't have an HDMI cable in stock, which, again, is my fault. I should have looked online first, perhaps. But the one point of your existence, if you're a brick and mortar these days, is to provide that immediate value where you can drive there and in minutes you get that cable. And it almost reminded me of Fry's in terms of towards the end of their demise when they were going out of business, Fry's Electronics. They had very little inventory. They weren't doing that great. And it was at Best Buy, they didn't have an HDMI cable. It's nearly unfathomable. Their core product, and actually, truth be told, the biggest profit margins for Best Buy and those types of companies are the accessories. Very similar to when you go buy a smartphone. Traditionally, when it comes to those types of purchases, usually you have smaller margins on things like televisions, but then they get you with the power strips, the HDMI cables, the surge protectors, the mounting kit, the mounting installation to a wall. They usually make most of their margin in the services as well as the accessories. Just like when you go buy a phone, the phone case will have high margin as well. And Best Buy, it blew my mind. They didn't have an HDMI cable. But you know who did? Walmart. And I can't help but think when it comes to electronics, if you're in a pinch and you need like a staple and you're not buying a big bulk order, you're not a business ordering stuff, or even for small businesses, Walmart's pretty darn compelling because, again, you can get your groceries. And granted, I'm not paid by Walmart yet. Maybe I'll be a sponsor someday. I'm kidding, probably. But it's one of those instances where they had what I needed. I just needed that one cord, that one cable. And Best Buy didn't have it. And to this day, that blows my mind that an electronics store did not have that one thing I needed. Now, before we dive into the Q3 actual fiscal numbers, I'm going to pull up their stock really quick. Surprisingly enough, their stock market, the market cap's about $14.77 billion in value. The past 5-year trend is actually up 8.51%. Right now, they're trading about $67.87 per share. Now, in the past year, they're down 15.4%. Year to date, they're down 15.6%. In the past 6 months, not terrible, they're down 3.48%. Past month, down by 0.5%. Past 5 days, down 1%. So again, it's not, because year to date, it's not detrimental. Don't get me wrong, 50% down. Again, I said 15. I'm trying to work on my enunciation. If you click subscribe, it may cure that. Perhaps. I'm not a doctor, but it can't hurt. So I'm saying. So the past year, they're down 15%, which, again, that's not great, but it's also not detrimental. And their dividend yield is 5.42%, so they actually pay out dividends, so there's a little incentive. So that's a little bit of background of their stock. Now going to some of their Q3 results, and this is thanks to the OG, and I might age myself with this. This is from Yahoo Finance, which is still around. Specifically, this is from a reporter. Her name is Brooke DePalma. Scratch that. She's a senior reporter. She's not just a reporter. They put that in the title. It must be important. Now, they said that net sales came in at $9.76 billion. However, that was lower than expected, $9.9 billion. They know that sales of appliance, consumer electronics, computing, and mobile phones all dropped, but the company saw strength in its entertainment products. International sales did a little bit better. That went down by only 1.9%. And that is pretty darn, that's some big dips. So adjusted earnings per share is $1.29 per share versus the $1.18 expected. And again, when it comes to the total U.S. sales are down 7.3%. Appliances are down specifically 15.8%, which that's not too good. I'm not sure about the margins on those. Although, a good funny joke if you're ever in the refrigeration section, and I think some of my veteran friends kind of like it. You ever wonder why the veterans saluted the refrigerator? It is because it was a General Electric. Haha, military pun, kind of. It's also kind of sad because General Electric no longer actually manufactures that. It's just a licensing agreement. Not a fun business fact. Now, they know that entertainment is actually up 20.6% versus the 5.67% expected. Consumer electronics are down negative 9.8%. Computing and mobile phones are down 8.3%. So that is not too good. And interestingly enough, it'll be interesting to see how the entertainment sales break down next year, because they're sunsetting their program where they're carrying physical media. And if you care about, actually owning something and you don't like censorship, physical media is a great way to combat that. Because again, it's very hard for them to alter works of art or works of entertainment if you just have it on a CD or a VHS or 8mm tapes. Well, is that real? Nevertheless, you know what I'm saying, probably. Now, they noted that inventory for Q3 was 4% higher year over year, but the CFO, Matt Bilunas, said nearly $6 million in inventory receipts came in a few days later than expected last year, moving their numbers from Q3 to Q4. Therefore, inventory numbers are down 4%, excluding that factor. They also noted in terms of the real estate portfolio, it's closed 24 stores in the past year and shut down nearly 100 locations, or approximately 10% of all locations in the past 5 years. So they're definitely shrinking their real estate presence, which again, it may very well just be closing the underperforming stores, the stores in unsafe areas, San Francisco. But it isn't good when your main value add is a physical retail. I know Best Buy has an e-commerce like every company does these days, but again, the big value add is if you need electronics, you go right there. That being said, they didn't have the HDMI the one time I had to go there, but there's one of those instances where that's where the big value is of having a brick and mortar these days, is immediate gratification or immediate fixing a problem. And the more they reduce that locations, what's the compelling reason? Let me know in the comments. What's the compelling reason to go to Best Buy online versus another e-commerce platform like Amazon or Walmart? There's a myriad of different competitors. I mean, all of a sudden the competition just explodes compared to online versus a brick and mortar. Or if you go to like a strip mall or a group of stores, how many electronic stores are there? There's not that many. So let me know in the comments. Then ADHD question. Let me know if you have a Circuit City sign, as in a sign from a Circuit City building. I've been trying to find one for 5 years plus, and I still have not had any luck. And I do pay finder fees, or if you have it on you, I'll actually just pay to buy it myself. I'm always looking for cool pieces of business history, and truth be told, that was one of my favorite companies. I'm actually trying to buy one of the out-of-print books about Circuit City so you can learn a little bit more. But let me know, do you think Best Buy, are they going to continue to shrink? They're also lowering their outlook for next year. It's one of those instances where Best Buy lowered its fiscal guidance for 12 months, ending in January 2024. Revenue for the year is now expected to come in between 43.1 billion and 43.7 billion compared to the prior guidance of 43.8 billion and 44.5 billion. Sales are expected to decline 6% to 7.5% compared to the expected 4.5 to 6% decline previously expected. So, I mean, they're continuing to go down and decrease in sales. I'm not sure what could turn them around at this point. But again, let me know in the comments. It's been fascinating here what you have to say. Other interesting business news, you have American Eagle stock has a little bit of a broken wing as it drops about 17% after their holiday forecast report. Now, this comes to us thanks to CNBC. And let's pull up the long-term trend of American Eagle stock, which I'm actually surprised they're still around. Truth be told, I think I was fortunate. I was treated twice when I was a child. It's a very rare occurrence, but I actually did go to the mall. And I remember I was shopping, and my mom did get me an American Eagle jacket. Truth be told, I should have worn that for this segment, because it is... Yeah, it is in my memory box still. Gee, hindsight's 2020. Now, if you look at the long-term trend of American Eagle stock, 5-year trend, they're down 14.46%, and as of the recording of this episode, they are trading at $16.72 per share, and the market cap of $3.3 billion, dividend yield of 2.39%. In the past year, they are down, actually up 8.82%. Year to date, they're up 15%. Oh, hindsight's always 2020 with investing. Well, with many things in life, truth be told. In the past 6 months, they're up 41.89%. Jeez Louise. Now, in the past month, they're down 2.37%. And in the past 5 days, they're down about 15%. Again, in that one day, they dropped about 17% thanks to their outlook for Q4. Now, specifically, we're going into American Eagle expects sales, and this is thanks to, again, CNBC, by the reporter by the name of Gabrielle Fangro. And they noted that for the quarter, American Eagle expects sales to be in the high single digits ahead of the 3.4% sales growth analysis had expected, according to LSEG. However, it is expected that its operating income to be between 105 million and 115 million, which is mostly below the expectations of 114, according to Street Account. The forecast was dampened by an expected 20% uptick in selling and general administrative expenses, the company noted. Which I don't know if they're going to break it down into wages or taxes, but that's a pretty big bump in expenses. 20% in administrative expenses and selling expenses. The apparel retailer outperformed in its fiscal third quarter. However, here's how the company did compared to Wall Street anticipated. Earnings per share came in at 49 cents compared to the 48 cents expected. The revenue was 1.3 billion compared to the 1.28 billion expected, which again is great news. That's what you always want to do, is knock their expectations off, so to say, and overachieve. The company's reported net income for the 3-month period that ended October 28th was 96.7 million or 49 cents per share, compared to 81.3 million or 42 cents per share a year earlier. So some great sales year over year. They know that sales rose to 1.3 billion, up from 5% from 1.24 billion a year earlier. During the quarter, American Eagle's gross margin came in at 41.8%, below the 42.1% that analysts had expected, according to Street Account. Which, again, is one of the reasons where I almost justify purchasing clothing. Granted, I'm one of those old souls where I think you just have to buy 1 or 2 suits and suit up and make them last forever. But it's also those instances where the profit margin on clothing is so ridiculously good. It's usually 50, 60, 70% for some of these luxury brands. And it's also one of those instances where high risk, high reward. A lot of people try to get into fashion. It is one of the most competitive industries out there. Very few entrepreneurs break in and really make a dent in the universe, as I would say. I think perhaps one of the most infamous entrepreneurs being Daymond John, creating FUBU, which created a billion-dollar empire. Is a brilliant entrepreneur with that endeavor. It'll be interesting to see, but anecdotally speaking, I think Kendra Scott's probably one of the more recent entrepreneurs that we've seen a huge growth rate. Now, granted, I'm not a big fashion guru. Of course, you can tell I just pick the one good style, make it last forever. But nevertheless, it is a huge risk reward. But one of the rewards is if you do make it, you can make some pretty attractive margins. Now, They noted that for the full year, American Eagle is projecting a revenue to be up a single digits compared to the previous guidance of low single digits. Analysts had expected full year sales to grow around 2.6%, according to LSGG. The retailer tightened its forecast for full year operating income and expects it to be the range of $340 million to $350 million, compared to the prior guidance of $325 million and $350 million, which is what analysts had expected according to Street Account. SG&A expenses were also expected to be up in the low digits a full year earlier. Now, they also noted that retailers have been on pins and needles ahead of the crucial holiday shopping season over concerns that demand will be tepid, and muted commentary from American Eagle and Abercrombie and Fitch follow similar remarks from other retailers that recently reporting earnings. And again, they also noted other companies such as Best Buy and Lowe's saying that they believe is a lot of unpredictability when it comes to the consumer, which unfortunately it's not good, but I do agree with that sentiment, because whether you're a business or a person or an individual, whatever you are right now, there's a lot of economic uncertainty. No one really knows what's going to happen. There's a lot of people with the speculation on the 2024 election, depending on who gets elected. Businesses might be regulated out of business. Your personal income taxes, that might be thrown a curveball. All of a sudden, might have to pay more or less in income taxes. There's an unfathomable amount of uncertainty in the market right now, which is also why there's a lot of stock speculations, there's a lot of stocks going up and down, and even the housing market's been pretty dampened because of the high interest rate, which I was going to say, thank your government our government, for creating that problem with printing more money than ever been printed before. And then we had to raise interest rates so that we didn't have hyperinflation, although we still had it. And yet Janet Yellen still has a job. She's in charge of the Treasury, which is unparalleled job security if you're in the public sector. Performance is usually not correlated with the actual keeping the job, but nevertheless, all the uncertainty means less consumer spending because they're trying to keep their money and save it, which ironically might be their detriment because of inflation destroying what little savings they have. So it'll be interesting to see, are people going to go out and shop till they drop, as the youth might say? Black Friday is tomorrow, and anecdotally speaking, I don't know anyone who actually is going to go to a brick and mortar. Personally, I'll just be working as usual. But I'm sure some people will go to some brick and mortars, but are they going to spend as much as they did last year or the year before? Or are they going to pull back dramatically and only buy the bare necessities, or maybe buy fewer gifts for people for Christmas, as opposed to the previous years where they go all out, as youth might say? It'd be fascinating to see what happens, but let me know in the comments. It'd be even more fascinating to hear what your experiences are and what you have to say. Thank you, everyone, for taking the time to tune in. Again, have a happy Thanksgiving. Especially want to thank you for taking the time to tune in today. Don't forget to take the time to subscribe. We're trying to get to 4,000 subscribers by the end of November. So if you click that button, I would greatly appreciate it. Also, any comments are greatly appreciated because I want to make the channel better and better, and your feedback is appreciated, even if it's harsh critique, because I argue that is how you grow the most. Lastly, don't forget to take time to tell your family, tell your friends, tell your coworkers, heck, tell your enemies, tell anyone and everyone. Just stay safe, fight the good fight.